when you look at interest rates, 1% increase in our models for the discount rate, it's about a 10% headwind to valuations.
That was Doug Clinton of Deepwater Asset Management. I've seen him a number of times on CNBC, but I think it's quintessential that you understand what he just said if you're going to be in the stock market for the next 15 to 24 months. Because all the debt that these corporations have that they took out 2-3 years ago at an interest rate of 3 or maybe 4%, is going to go up as that debt comes due and has to be refinanced. And that's the way corporate debt works. So what they were paying, say 3% for, they're now going to pay 10% for. That's going to come directly to their bottom line. So if they have substantial debt, it's going to maybe take all their earnings away. And if you understand what he said, for each point it goes up, it's going to reduce their potential earnings by 10%. So if it's at 3 and it goes to 9, that's 6. So that's a 60% reduction in earnings. That's what he just said. And if you'll understand that, you stand a chance. You stand a chance to make some money by owning the right stocks. But you must understand and know their financial situation. And that's what I've created. And I've got it on my website. I'll explain in this video how you can have access to it. But first of all, I want to tell you why you need to be buying Meta and selling Oracle. It's once you see this, you're going to say, my God, that's unreal. Oracle could be going bankrupt if they don't get their act in gear. Oh, by the way, this is not financial advice.
Best of Us Investors presents Kerry Griegmeyer.
So why do I say you need to sell Oracle if you have it and avoid it if you don't have it? I happen to have it, and I'm trying to get a price out of it. But I looked at the numbers, and that's what I think you should do. And you start on their income statement. They got about $50 billion worth of revenue, and they have gross profits of $36 billion. That comes down to a net income after expenses of about $8.5 billion. What I want to focus on is this number, the interest expense. That's $3.5 billion, up from 1.78 or 1.8 in 2017. So it's almost doubled their interest expense. But at the same time, their net income has gone down. That doesn't feel too good to me. So what I want to do then is go to their balance sheet and look at what we have over here. So here again, we have current assets at $21 billion, down from a year ago from $31 billion. That doesn't feel good. Short-term debt of about $4 billion, which is pretty level. Here it got up to 8. Long-term debt has climbed from in 17 of 48 to 86. Wow, that's pretty heavy. Total debt is now 90 billion, up from 60 billion in 18, about the same in 17. Retained earnings, those are negative numbers I think I'm seeing. So what I look at this and say, okay, if they have this long-term debt, that or total debt of $90 billion, and they're paying a interest expense, what was that, over on the income space of 3.5, that's roughly a 3.8% interest rate, okay? So now if I say their interest, that this debt has to be refinanced as a result of the raised interest rates that we're dealing, and it's going to end up roughly 2.5 times higher. That means that their interest expense is going to go up 2.5 times, or that's going to end up being a number somewhere around $9 to $10 billion in interest. Well, where is that difference going to show up? Right there. If that number goes, let's just say to 8, So it increases 2.5. You take 2.5 off of the 8.5, you're down to 6. So they'll have about, what would that be? 6 on 8, something around a 25% decrease in income, which also comes to a decrease in earnings. With that, the stock tanks. Okay? Sell Oracle. It's that simple. All you've got to do is look at the numbers. You have access to these. I have access to these. I dig into it. Okay, so we're going to sell Oracle because of what? The rising cost of their debt maintenance. Okay? It's going to go up 2.5. They are in the potential to lose money in the coming quarters. Okay, so then I said, let's buy Meta. Okay, so this is Meta's income statement. They have revenues of $116.6 billion, a gross profit of $91.3 billion, a net income of $23 billion. And what we're looking at and trying to measure is, what is this increase in interest going to affect their balance sheet? Well, we see in interest expense, they have a negative number. And you can see they haven't had a positive number until 2019. What is that? That basically means that they have received more interest than they paid. Okay? That's, I would say, a good thing. So this is Meta's balance sheet then. Okay, we have a short-term debt of $1.3 billion, a long-term debt of $25.2 for a total debt of $26.5. And what we're trying to figure out is, how is this debt going to impact their earnings statement? And we can see that they have retained earnings of $64.7 billion. That's money in the bank. So if, in fact, the interest rates go against them, as they will, if they're refinancing their debt, they have in retained earnings $64.8 billion, they can pay off their debt. They can pay off that $26.5 billion out of the 64, and it doesn't affect their earnings. So this I look at and say, this is a strong company. It's got itself in a very strong position, and it's a money machine. So this is a stock I want to own. Now, might its price come down as the panic when the market wakes up and says, we've got another financial crisis on our hands? Might this stock go down some in price? Yeah, it might. Just because the overall sentiment in the market is negative. But Meta is a strong, strong stock that's going places because, again, it's going to be a major player in AI. Now, I've been sharing this information with my tribe members over on our website. And I built this spreadsheet here on Google Sheets that basically is examining all the metrics that I just showed you and putting it into a easy form. As you can see, the revenues, revenue growth, the debt, the interest based on a 4% or current interest, and then projected future interest and future income, and how it would then decrease the amount of income and how much retained earnings they had. I had this available for my tribe members to see, and then I even went and said, I'm just going to share it for the whole S&P 500. And you can see there it is. But you'll notice it says either loading or error. And let me show you what the error box says. Exceptions, service invoked too many times in one day, URL fetch. What that means is that when I buy this software and then upload it into Google Sheets gives me a quota per day. That is to say that I can upload 200 capsules or cells of data, 200,000 a day. Well, the fact is that there are 21 columns and 545 rows. So if I upload it once in the day, that's 11,000. If I then share it with my tribe members and they come on to the website and they look at it, we surpass the 200,000 very quickly. I've just learned this on the last couple of days. So my dilemma is, what do I do? Well, what I've decided I'm going to do is I'm going to upload it, and then I'm going to take a static picture of it and then make it available on a PDF to all my tribe members once a week. So they can go in and they can look at their stock, American Airlines, and find out what their debt is and what their debt service is today, interest, and what it's going to be in the future. And then I will highlight those that I think are in trouble under the percentage decrease in their earnings, projecting the increased debt service, and then we'll even go into some of their PE ratios, their current ratios, their debt to equity, their interest coverage, things of those natures. But I can't do it on the spreadsheet because the more people I have, the quicker it goes into error mode. So that's what I'm going to do. I'm going to consolidate this. I'm going to put it on a spreadsheet, a PDF, and every Saturday or Sunday, I will email it out with a full written and hopefully video-supported description of what's happening. And then what I'm going to continue to do is videos like I just did. I'm going to go through, do my work, recognize, should we own Palantir or shouldn't we? Should we own Marvel or shouldn't we? Who's the worst stock in the S&P 500 based on this analysis, and who's the best stock? Those are the videos I'm going to be doing in the future, because I think, as Homer said, this isn't speculation. This is real data, and I want to make it available to you. So how do I make it available to you? Well, again, you come to the website. You'll see this panel here for the Platinum platform, and that's what this is. That is the financial analysis that I'm doing, plus the swing trading and technical analysis that Mark is doing. I believe that's the best I can do for you right now. But what I will tell you is every week, the deeper I get into this, the best gets better. And I will, if you'll support us, and when I say us, my team on Best of Us Investors, and you'll come to our Platinum platform, I'll give you more information than you can digest. And I'll master the presentation of it. Okay, I'm Kerry Grinkmeyer. I'm a retired financial advisor. Some of you say you've got enough money, you should just go away and don't be doing this. You don't know my story, okay? That shirt right there was for my daughter, who died of cancer in day after Christmas in 2014. God and I parted ways. God and I are finding a new level of communication. This is what gives me strength today. So, come join our tribe, learn more about me, learn more of what I'm doing, and learn more about yourself. Get on the bus.